Good afternoon. I'm Brent Wilsey, and welcome to today's Smart Investing Briefing.
And I'm Chase Wilsey, and it's the Friday edition, talking about fast food. As you can see, the
Yes.
Golden Arches, McDonald's.
I'm glad I just ate because this looks kind of good to me. And probably people saying, "Oh, McDonald's not very healthy," but But we are talking about today because there's something big going on at McDonald's, and they're changing to table service. And people are thinking, "Are we going to have waiters there? What are they going to do? What's it going to be like?" So we thought we'd explain to you what's going on with McDonald's and their table service. They're going to be setting up these self-service kiosks for ordering and smart menus.
Yeah, and it's kind of interesting. We were talking beforehand. There was a Jack in the Box on Scripps Valley Parkway, and they had the kiosk there, and they took them out. So I'm wondering, do kiosks not work at all locations?
Yeah, I don't know. I kind of liked it. I thought it was pretty good. And I go in there one day, where'd they go? And they go, we took them out. So, but what's actually going on, the reason why they're doing this, the smart menus and the apps and everything they're doing, is they're kind of far behind Domino's, Starbucks, Panera. You go in there, they got all these fancy things going on. McDonald's, well, they've been around, 61 years. They haven't kept up very well.
No, not at all. And, Domino's is one of my favorite companies to actually order pizza from. And they have a very nice app. It's very highly developed, I guess, in this type of world, the fast food restaurant type of world. So, yeah, McDonald's definitely needs to pick up their game. And, one of the other big concerns about these kiosks is the franchisees will be spending about $60,000. And it's kind of crazy, too. With the estimated increase in the minimum wage, this might just crush these franchise owners.
Well, you're right. They're not very happy. They're saying, wait, we have tippet sales here. You want to spend $60,000, up to $60,000 these kiosks, and more labor costs. They're kind of bucking the trend a little bit, and McDonald's comes out and says, well, we'll give you low-cost loans.
There's low-cost loans everywhere.
Yeah, money's not that expensive. So, but we also thought it was interesting, too, on their mobile ordering in 2017. You got something to say about the menu, too. You're not that thrilled with the menu, are you?
I'm not that thrilled. I don't know if it's at all McDonald's or just this one I went to. It tried to be like a high-class McDonald's. It was these high-end burgers, and quite frankly, it wasn't very good.
Right.
And that's not what McDonald's is. I like to go to McDonald's for a Big Mac or a 20-piece McNugget meal. I don't like to go for a artisan sriracha cheeseburger. If I want that, I'll go to another burger place.
Exactly. So, but again, you can order on their app. They got 16 million apps, million people on their app so forth. They're gonna make it. You're gonna order in 2017. And also, just to clarify, this whole table service is you're not gonna have a waitress come into you. You're going to go to the kiosk and order, then sit down, and someone will bring it to you. It's actually gonna happen.
And that's why we're talking about the $60,000 doesn't replace labor. Instead, it moves people from the front desk to delivering the food, or also assisting you with the kiosk. So it's kind of like a double whammy. I'm still not really seeing the vision here, I guess, is my problem.
Yeah. And time will tell, but what we thought we'd do is say, is McDonald's now a buy because of this? We're going to see the stock right now is around 120. The high is 131.96. Right over here, it got pretty expensive. I liked it more when it was down here, even way before, way down here. But let's take a look at the numbers and see if with all this, is this going to make McDonald's a buy? Well, not looking so good here. Sales down 2.8%, earnings up 16%, but that could be because of some things they're doing with the accounting side, isn't it?
Oh, absolutely. Price to sales looks pretty good at 3.9. I'm sorry, not pretty good. It doesn't look good at all at 3.98. The average for the industry is at 2.24. There's no price to tangible book value here, and debt to equity, well, that's not material. Reason being, they have no equity, and I'll kind of circle back to that. But the current ratio of 0.96, that's okay. Debt on the balance sheet, $26 billion.
Wow.
They've taken on about $8 billion of debt in the past year. And equity, as I said, negative $1.6 billion. That fell from $8.3 billion positive last year in the equity side. They bought back about $11 billion worth of stock, it appears, as that's how much their treasury stock increased by. And that could be one reason why earnings per share increased, because of all those stock buybacks
right.
that occurred.
That's a mouthful, yes.
I know. What's going on there?
And again, you want to be careful about companies buying earnings. That's kind of what they're kind of doing, is increasing their earnings by buying back all their stock. And one thing I do not like about companies is when they borrow money to buy back their stock. That's never proven to be a good idea. And as we've seen, their stock is not really that inexpensive right now. 2017 earnings per share, $6.20. target sell price 102.30. So the management not getting a great deal on buying back their own stock.
Yeah, I think it's kind of silly that they are buying back stock at the current time. I mean, there's a lot of great other companies that it makes sense for them to potentially borrow money and buy back stock if it's a good investment. To me, this does not seem to be a good investment. As you said, the stock is overpriced based on the forward earnings. And as we've said before, and Robert Shiller showed, do not overpay for the earnings of a company.
It comes back to burn you, whether you're an investor or management buying back your own stock. So, well, thank you for joining us for our Smart Investing Briefing. If you'd like to find out more information about our upcoming Smart Investing Workshop on December 3rd,
it will be located at the Crown Plaza Resort and Hotel. And to register, go ahead and call our office at 858-546-4306 or go to our website, smartinvesting2000.com.